What's going on, everyone? It's your boy Nathan, the coach, here with Win with Nathan here at the Lender. Guys, let's talk about something that I love discussing with investors. I love discussing with people all the time, and this is going to be a little different. I've done videos on this in the past, but let's talk about it. It's really big right now, but let's talk about creative financing. You might be thinking, why are we talking creative financing? You know, you're a lender. You're always going to say one thing versus the other. Guys, I'm just here to hit you with the truth. Right? Creative financing, I have properties under creative financing. Creative financing is great. What's not great is how a lot of experts will teach creative financing and they never talk about the downsides. They never talk about the exit strategy. So let's talk about these things that I've seen recently, right, of people who got creative financing in the last couple of years, and let's talk about what they're running into right now, okay? So first thing you hear all the time from people who teach sub 2 creative financing is, hey, all you have to do is show 12 payments that comes off your debt ratio. Guys, that is not the case. If you truly read the guidelines of Freddie or Fannie, you can no longer use that excuse. So if you, the seller, have someone take over your home as a sub 2, and you say, hey, because the sub 2, the LLC is paying the payment, that doesn't omit it anymore. You got to read the guidelines. These coaches out here don't read guidelines. They don't know the guidelines, right? So you can't omit that out of your debt. So that means that that seller is always going to have that on their debt. The only way for it to be omitted is if the person who took over the note is on the promissory note. You're not on the promissory note of that mortgage, right? Because you're sub 2 in it. Now, the way around that is if you have a lease agreement, right, and you have a lease to own, and you can show tracts of lease, and it doesn't omit the debt, but it cancels it out on your next application. But again, these coaches, literally, he has a video on YouTube where he will tell you, call the bank, figure out what to say to lie, and lie for 1 month, and then switch it to the sub 2 deal. Guys, sub 2 is great if it's done correctly, but a lot of times they don't teach you how to do it correctly. Here's another thing, right? A sub 2 coach out there tells everyone, hey, when you offer sub 2, tell them, hey, as long as we put the property address in the LLC, right? So LLC, let's say it's 123 Main Street. I'm going to create an LLC called 123 Main Street LLC. They literally have said these words: the government's not smart enough to figure it out. It won't trigger anything. It's perfectly legal. It's not legal. It's technically against guidelines. So if you have a loan with Fannie and Freddie or government agencies, you need to read the guidelines. Can you put a Fannie or Freddie loan in an LLC? Absolutely. But you have to follow the guidelines. And what these guys, these yahoos, don't understand, and yeah, I call them yahoos because they're out there to get your money, right? They're getting rich off courses or consulting fees. You need to have the owner of said house needs to be primary or needs to be majority owner of the LLC if you move it to an LLC. So if you move it from, if I'm the seller and you sub 2 from me and you put 123 Main Street and I'm not an owner at all of that LLC, that does violate the guidelines, right? And when we say guidelines, it's what Fannie and Freddie put out there, because let's just say 95% of all loans are Fannie, Freddie, or government agency, right? I think I heard that stat recently. I don't think it's that much, but it might be. So, can that trigger anything? Absolutely. It can trigger what's called a due on sales clause. Do we see that happen a lot? No. Can it? Absolutely, right? The best example of this I can tell you is, you know, you go out there every day driving. We all speed, right? You might say, hey, everyone else is speeding. Please don't pull anyone over. Well, guess what? You might be the one guy that's speeding going 10 miles an hour with the crew of 20 people going the same flow, and that officer might pull you over. And you're going to say this, well, everyone else does it, right? No one else gets caught. That's what they're teaching you with sub 2. Now, I'm not telling you, again, sub 2 is illegal. I'm telling you there's a right way to do it. And a lot of these times, these people don't teach it. Or they just keep coming up with new things to try to seem sexy, right? So creative financing, again, is a great thing, but it's not being taught correctly, or you're not seeing people do it right. Let's talk about this other thing, this method everyone talks about. And for the record, I've researched the method for the last couple of years. It's been a method that a lot of people taught. Just because someone claims it's his own method now, it's been around forever. Here's the problem with that. they want you to go 100% leverage on a property, okay? So they want you to go get a fake loan or private money, which is fine, make a down payment, get a loan for 20% or 80%, 75%, whatever, and then you get a seller carryback. Perfectly legal. Where they mess up is this. They tell you that you need to do like a land contract, executive contract, whatever you do, do not put a lien on it. Okay? Understand. So a couple issues with this method. First issue is if you go that route and you don't put that second lien registered, what's going to happen in a year or two when that person says, hey, I want to refinance? Right? How are you, the seller who has a second note at 25% LTV, right? Or 25% of the total LTV, how are you going to keep that first person from refinancing? Right? Unless you put a lien on the house, they're not going to know. When a mortgage company pulls up everything, they're not going to see stuff or title without knowing if it's been registered or recorded. So I might say, hey, I'm going to refinance right now and I'm going to take or even take a HELOC. I'm going to go up to 90% LTV. And mortgage company or bank or whoever does all the research, there's no recording of another lien or anything. It's not registered or recorded, right? They teach you to keep it in a safety deposit box. So what's going to happen when that person takes out 90% LTV on a cash out or HELOC, and then you're sitting here with another note of 20%, you're like, man, we just hit 110% total LTV on a property. That's not good. And it's not good for you because if something happens and burns down, insurance ain't going to pay for 110%, right? So I don't agree with holding land contracts, executor contracts where people will tell you, get it signed, notarized, but don't record it, right? Because how are the people who are going to do the refinance or all that, how will they know? The only way they'll know is if that person, that the homeowner, tells them. All right, so that's a jeopardy. Second thing that I love these coaches, and especially local ones, they tell you do 80% loan, 20% private money seller carryback. Guys, if you need to desperately get in a house, I get it. Creative financing is great. But let's talk about the downfall of that. Listen to it. 80 plus 20 equals what? 100%. So you're 100% leveraged on a property. Most times these people that are buying with creative financing are going to offer a little higher than normal because they want to get a property. So if you have 100% on a property, let's say it's worth 300, you have a loan on it, 2 loans for 300, how are you going to refinance in the next several years, right? A lot of people just want to do it and then they try to sell it. Well, you're always going to be stuck with a heavy leveraged home. Right? You're not going to be able to refinance that easily, right? You're 100% LTV. So if you are buying today at a rate of, let's say, average rate between the two is like 7%, you're stuck at 7% because you're not going to refinance in the next few years unless you do some add-ons to get that value up. Creative financing became big when we had huge appreciation. Are we seeing that now? No. So a lot of creative financing is over leveraging people and getting risky. So that's another downside. Again, creative financing is a wonderful thing, but you got to think about the exit strategies, right? You got to think about this because right now I'm taking a lot of phone calls from people that said they did the so-called method or creative financing over here or sub 2, and they're getting stuck in the refinance process. I've got a customer in Florida right now. They did the method. The guy did a HELOC, right? Basically, they wanted to sub 2 the first loan. They had the guy take out a second loan, a HELOC. That way they came out of pocket nothing, right? But yet the seller got all his money. Here's the kicker to that, right? Big kicker they didn't think about. HELOCs are open-end, which means you can take money out at any time. They're also usually a variable rate. They adjust to the market. So our guidelines, a lot of loans, and again, I'm being general here, not saying all loans follow the same guidelines, but if you have an open-ended HELOC, and you're not on it, and you have a cash withdrawal of like $5,000 or a certain percent over, we can't refinance because it's still being used in someone else's name, right? You have to make sure you understand the guidelines for when it comes to refinancing. The other thing with refinancing is you see a lot of people doing contracts where they say don't record it, hide your name. That way you can never show someone that you own the property. The seller still technically owns it. Guys, that's a beautiful thing, but think about the exit strategy. Fannie Mae has a guideline. A lot of people follow Fannie Mae. If you do like a land contract or executor contract, you're not going to be able to refinance, right? You can rate term, but you're not going to be able to tap into that equity, right? Because you're not on the deed. So you need to check with this. Guidelines change all the time, so you need to check with it. Again, creative financing is a phenomenal tool. It's phenomenal for people that are distressed or can't sell a home, or who are credit challenged and can't buy a home. But you have to plan on the exit strategy. I know a customer right now that in 2008, 2009, they did creative financing to buy a home. They took 12% interest, right? They never got put on the deed. All they had was a signed paper, seller finance. It's a beautiful thing. They basically took over the payment and added a little more. They've paid on it since then religiously on time. Now they're running into issues. The problem is back then someone told them not to record it. That owner of the house is now fighting and trying to refinance to get equity out because it's appreciated over time. So now they're in a battle because there's no proof, right? There's no proof that it was recorded. Again, they're going to win more than likely because they have a signed document from said person, seller. But here's the problem. You got to waste time fighting it. You got to waste time, money with legal. It's not fun, right? Yes, you can do all these things, but do you really want to go and fight it? Do you really want to spend the time, the money, the attorneys, and all this stuff just to be prepared? It depends on your strategy. So guys, the point of creative financing is this. I love creative financing. I think there's a lot of opportunities out there for creative financing, but you need to do it right. A lot of people, and locally I see this all the time, people say, hey, do this method, do this. Hey, I'm a local creative expert. Guys, they've never once talked about the downfalls or the pitfalls, right? You need to be prepared for an exit strategy. You need to be prepared for what happens if I can't get this removed off my debt to income ratio. Here's my favorite. Veterans who can't sell their homes. People find, they literally teach this on YouTube, find people with FHA or VA homes who can't sell, go after them with sub 2, right? Because they're desperate. Guys, that is screwed up, right? They literally teach you to go after distressed people to take advantage of them. Guys, if you take over a sub 2 deal on a VA or you assume it, there's a good chance that vet is going to lose their having a brain fart, guys. Every once in a while, you got to have that entitlement, right? So at the end of the day, if a buyer's coming to you with seller financing, you need to ask, what benefit is it for me? What's the drawbacks? Because you might just get screwed in the long run, right? If you can't get that off your debt to income ratio, you're stuck for your next purchase. If you lose your entitlement, you don't get your entitlement for your next purchase, right? FHA, if you're showing that you still own an FHA home, do you meet the requirements for a second FHA loan? Guys, the fact that they teach to go after people who are high leveraged and are desperate to sell tells me that they're preying on the weak, right? A lot of this. And again, it's not technically illegal. It's how you do it, whether it's legal or illegal. So before you do creative financing, please make sure you don't just look at the pros, you look at the cons. Make sure you understand, hey, if I were to refi 3 years from now, can I? Do I have the verbiage in my contract with seller financing sub 2 or anything when I have a balloon payment that protects me when that balloon payment comes up? I guarantee you most of the people here locally don't know how to protect themselves that way, right? They might, but do they? And if they do, I bet they don't explain to the seller what that verbiage means and how that affects the seller. So guys, love creative financing. I love lending. I love winning in real estate, but you have to understand when it comes to creative financing, just because someone says they're an expert or they've been through a course doesn't mean they're telling you how to do it right. They could be watching stuff on YouTube, getting all this advice. I watch the YouTube videos as well because I always like to learn. I like to see what people are teaching, whether it's ethical or not, or whether it's wrong or right. And guys, if they teach you to lie just to get a deal, it's probably not worth it, right? You might not get caught on your first deal or your first 500. But if you get caught once, it's going to open a Pandora box. Trust me. We've seen this in other areas too. right? And as AI evolves, right, AI is being put to audit and do more things. Is it worth the risk? Maybe. Is it worth the reward? Maybe. But you got to ask yourself, right? Just like right now, the most popular thing out there that we get calls about a lot right now, non-recourse loans. You know why? Because a lot of people are trying to do IRA, self-directed IRA loans. Get those calls all the time from brokers, get those calls all the time from clients. It's a great strategy. The problem with the strategy is I don't think a lot of people talk about the issues, right? They're great, but they're not for every investor. A lot of investors right now need cash flow. Those are not for people who need cash flow. They're not for people who are going to commingle money either. So guys, anytime you see something that is out of the norm, that's not been around forever or not that's been big, you got to ask the questions. Why aren't the experienced people doing this? Why aren't people teaching it? Why aren't people talking about the bad stuff? If you can't talk about all the bad and someone else has to ask a question and say, hey, this is an issue because of this, can you explain it? That means that they are one direction minded, trying to sell you something, right? So guys, again, creative financing I love. I think creative financing is great. I think people overlook the most important creative financing out there, and that is becoming the bank, right? I think if you become the bank and help people get in homes with private lending, doing creative things, I think there's a way to win there. I don't think a lot of people do that. A lot of people don't think about it. But as many people think, you know, with your golf games, my golf clubs are here, everyone wants to go for the driver and hit the big ball, right? No one thinks about the smaller stuff. Like my golf game used to be pretty good because I could chip. I can, with my irons, anything close within 160 yards of the green, I can usually place it where I want. My driver wasn't always as accurate, but my iron game was pretty good. Then I got my driver to be better, right? The driver is doing every typical loan. Then you've got people that want to focus on, you know, the 7-iron. I never use my 7-iron, but a lot of people love it, right? So the point of that is everyone thinks like you have to go one way, driver, driver, driver. Well, it's okay to take out a 7 or a 4 or 5-iron, put it in the center of the fairway, and take a layup shot, right? Maybe make wealth through private lending because you're getting points, you're getting interest, and just take your time. You don't have to hit a home run, a 350-yard hit on the green on a par 4 every time to win at golf. Same thing with lending and winning in real estate, guys. So, guys, I know this went all over the place, but I love creative financing. I hope you win. I hope you do it correctly. But I do want to issue that we are seeing more banks call due on sales clause. We are seeing more people teach this stuff incorrectly. It seems like if anybody actually wanted to watch these videos, they could easily find out people that you should go after as an auditor. But they don't. I mean, they could. AI could do it, but whatever. So, guys, if you have any questions directly about this, please feel free to give me a call. If you're looking to refinance out of one of those methods, Pace Morby method, Sub 2, whatever, give us a call. I know a lot of people are struggling to refinance right now because of the method they did and how they set things up. But, guys, we're here to help any way we can, or at least give you advice on how to do it in the future. Till next time, have a good one.